Good morning. It's Harvey Jackson. Just going to get through some news here, but just going to highlight the seasonality. It's a function of technicals and fundamentals. So when I'm talking technicals, it's just comparing one chart to another, one year to another. But the fundamental is when the market has the least amount of supply going into the spring planting in the northern hemisphere, and the market actually has the most uncertainty about growing that crop. So, and once the certainty starts to come in, the market actually starts to fall apart, a fundamental. So let's just have a look at it. Just took this from X, and you can see that the market, even for soybeans, wheat, and corn as a whole for the last 10 years, you can see when the market starts to fall apart, and it goes down from the springtime to the fall. Here, looking more specifically at canola, you can put your time in here. You know, the when the market on the aggregate, because the last 5 years didn't show the same, but it still fell apart. When you look at it on Minneapolis wheat, it's slightly earlier, but then it falls apart. Yeah. Anyway, I just wanted to highlight the canola and the wheat as more specifically. Hormuz closure could trigger agri-food shock, price crisis within a year. Food FAO warns. So that we've been talking about that forever, but now it's in print again. It's more scare tactics, I guess. But China again flags tariff cuts for U.S. agricultural trade after Trump-Xi meeting, but still no details. So there's still no details on whether this whole whether they're going to cut the tariffs and how much they're going to buy as well. Even though it's been very specific what amount that they're going to buy, an additional 17 million, and that's on top of the 25 million metric tons of soybeans that they're committed to. So it's more like 30 billion kind of uh, expectation of dollars getting spent on agricultural products. Just have a quick look at the weather. So it's finally updated. It takes a while, I guess, to put together data in Stats Canada, but that the drought did narrow down just to Alberta now, and and in the Peace River region, there's still pockets, of course, and it's not perfect by any means, but you can see that there's less drought than there was before. And if you look at the percent of normal, um, you would say that Alberta's maybe got some issues, and I would say Western Manitoba as well, and south of Regina. This is the frost warnings, and you can see that there is some frost warnings there. So if there's any corn, soybeans emergence, there could be some issues. I think the Northern Plains is definitely a lot slower planting than the core soybean wheat or soybean corn growing area. That's where the highest planting pace is, and likely over there. But this north area has been pretty slow. Quick look at the weather there. You can see that there was some moisture banding across there. Quick look at the markets here. So canola uh, up another dollar at 7.64. Soybean oil basically flat at 75.50. Crude oil is down 8.89 of a barrel, so at 107. And soybeans uh, down 3 cents at 12.06. Minneapolis wheat is unchanged. Kansas wheat is up a penny and a quarter, and oats are up 4.25, and the Canadian dollar is down again. So there's just a quick look at this market. So a gap that got caused by not trading on Monday, now the market's right at the basically a breakout level. And this is the November contract that I'm talking about. So you can see that there's a breakout level there, and if it gets above there, I would say there's still momentum, but you're going to need the European rapeseed to continue to break out, and its breakout level is let's call it $9 higher, and the soybean oil, which is the one that's doing most of the support for canola, it's not breaking out yet either. So it needs to break out above that 77 cents mark. And soybeans, the one that's actually doing the work based on the Trump G meeting, has got a little ways to go. It's actually real breakout level is above the 1260, I think it is. Crude palm oil is trying to at least get above this area here. It doesn't seem to want to stay up there very long. Crude oil just adding more pressure to the whole global economy. Same thing with the Brent. Diesel fuel futures chugging away, going basically straight sideways here. Gasoline is just getting staying sideways at this high watermark of expense as well. Canadian dollar, I would say the downside target would be right at this 72.56. Um, we're got close to today, but so you might as well say it has to get in that range, and then it could stall there just because of that 200-day moving average. The 30 year government bond yield is it's tracking along. It's still pretty strong. It's making higher highs here. Wheat, um, some pretty wild trading in the last couple of weeks for sure, but we're at these higher values for sure on the November or on the July, and then on the November we've got some carry in that market, and it's trading right at 737. More, it looks like this one's got more of a curve going up for sure on the Kansas, and it's above this breakout level that was important in the past, and it's staying above it. Chicago, same thing. And European wheat has not broke out. Corn futures, you see this chugging away sideways here. Uh, to break out, it would have to get above that let's call it 780 or 488 on the nearby, but on the farther out, it would have to go farther. Here's just a sell recommendation from Alpha Trade. They're just talking about doing some spread trades. So here's a spread trade idea. So you're selling September, buying the March. Oat futures. For a true breakout, it needs to get above that 388 area.